Hi, and welcome to an atypical afternoon edition of the Global View. It is currently 5 p.m. on Wednesday, June 1st. We specifically waited to get the full response to the Fed Beige Book that came out at 1 o'clock Central Time U.S. this afternoon. And in a nutshell, that was kind of constructive. And don't forget, we're going to be headed into other big influences this week. ECB Thursday morning, global PMI, services PMIs, and the U.S. employment on Friday morning. But here's the quick take on a market that has had somewhat better U.S. data, certainly, but with some weak spots along the way. And what all of this has seen in the markets is some weakness on that weaker data starting on Tuesday morning on the 31st as we came back in from the U.S. Memorial Day holiday. That knocked it down to about 2086 on the afternoon, and this morning, just early, it got it to around 2085 to just below it. Now, 2085 is a key intermediate term threshold that was very important. The market got both above that and previous had been up into and above 2075 to 78, as we'll see on the intermediate term charts when we look. And the next real resistance should be the old trading high up at 2105. That goes back to April 20th, and the market's been spending a long time below it, and the question now is whether it can push through and get up to the higher resistances that are at 2120. Quite a bit of congestion there earlier this year earlier last year into May, at which it topped at 2132, and subsequent a lot of work around 2120 before the bigger failure back into August of last year. And that pretty much does it for the quick take on the S&P 500.